Check, please.
Guys, it blows my mind all the time that whenever I hear someone talk about investor, the first question is, what are their returns?
Yes.
Okay, makes sense. I get it completely.
They've demanded it from you, Paul.
I don't ask that question.
Go on.
Whenever I meet an investor, I don't ask them the question, what are your returns?
Okay.
What do you think the first question I ask them is?
What's your investment process?
Yeah, tell me your process.
Okay.
Or here's a company. What do you think of it? There's no right or wrong answer. Just tell me what when you look at this company, what do you think of it? That's what I want to hear. Because any time there's a million reasons. We talk about in the psychology of money. In the psychology of money, we talk about a good investment still has a 25 or 30% chance of failing. So when it fails, does that make the investment bad? Or the fact that luck just happened to be against it? And when an investment does really well, is it because it was a good investment or because luck just happened to take over for it? Right? So if an investment has 80% chance of being successful, 1 out of 5 times it's still not going to be successful. And if an investment has 1 out of 100 chance of being successful, 1 out of every 100 times it will be very successful. But we're in the business of long-term averages. We're in the business of being at the casino, except the odds are our favor. We can choose when to lay money on the line when the odds are heavily in our favor. So to me, what makes a good or bad investor? What's my answer going to be?
Process.
The process.
Yeah.
I want to hear their process. Show me your process. Because 1 investment, 2 investments, 3 investments, 1 year, 2 years, when you go look at investors, the way to really ask somebody how well they did is, show me how you did in the last bull and bear cycle. Not show me how you did in the last bull market, not how you did in the last bear market. Show me the full bull and bear cycle. I want to see how you did from the beginning of a bull, through the end of it, and the start of the bear, and through the end of that. So the bull and bear cycle is important because, as Warren Buffett says, you never know who's naked until the tide recedes. So that means basically a bull market can make you feel like a genius. Can make everybody look like a genius. But the real true investor is the one that does well during a bad time. When I say well, it doesn't mean they're making money during a bear market, but if they're losing less. That's the point.
I have seen this. What kind of moron like you doesn't make a ton of money in a booming stock market?
Yeah. You know, I was at a real estate seminar a few years ago on a panel, and this guy was bragging about how he's still investing because the deals he did in the past are getting 20% returns. And I remember thinking to myself, so wait a second. The deals you did 5 years ago that are getting 20% returns, because of that, you're still investing today. They're completely irrelevant from each other. Why does one affect the other? What matters is today.
Mm-hmm.
With that said, if you buy an investment today that does poorly, are you saying you're not going to invest in the future? Because that reason, that doesn't make any sense. But these are the thought processes out there. And that's why I didn't invest with that person when they asked me to. And that's why when somebody else told me they invested with them, I laughed at them. Because I was just like, you invested with that guy? They're like, yeah. I'm like, that guy's a moron. And that's what I really thought. I like, literally his thought process was, our investments from 5 years ago are still doing well today. Therefore, we're investing more money today into more deals.
That would seem logical.
No, it doesn't. Does it? Maybe I'm just brainwashed myself into understanding investing, but...
Well, isn't it the same trend? A stock has been doing well, so I'll invest in it.
I bought company A. It's up 40%. So therefore, I'm investing in company C. Doesn't matter why? At what price?
Well, we see a lot of that with stocks. I mean, that's how I was investing, Paul, back in the day.
Oh.
Stock is doing well, buy stock.
No. Stock was doing well, buy different stock.
Oh, I see.
They invested in company in deal A, it does well, so they invest in deal C later on the road. That doesn't make any sense. And even that makes even less sense than the whole company, deal A is doing well and we invest more money into it. I mean, I can understand that to a certain level. I buy real estate deals. Okay, but even then I should look at it and say, no, wait a second. Will my X amount of dollars invested in this deal get a good return on the money no matter what the deal did in the past? Every new dollar invested should be isolated to that new, looking at it like it's a brand new deal. New stock, new investment, everything. If you put more money into a company, into a stock, what matters is not how the stock did in the past. What matters is how does it look today? How does that money look today? Is this the best use of my capital today? That's what makes a good investor.
These value investing concepts speak to you. You can join the Everything Money community. You can get the software behind Paul, and you can have all this in the palm of your hands. By joining the community, you'll be joining thousands of people all over the world who speak and communicate just like you on these topics. We help each other. We work together. We day trade. It's incredible. You get the software, you get the data, and all the amazing tools that are coming out in the future. Go to everythingmoney.com or patreon.com/everythingmoney and join today.
My investment question, which I want to figure out a way to keep asking this investing question without getting the world to understand it. I've asked this investing question. I've asked so many people, only 2 have ever gotten it right. And this investing question is important because it allows you to see somebody's thought process very quickly. I've asked Goldman Sachs investment bankers, all got it wrong. I even say to people, it is a trick question. My one hint is it's a trick question, and everybody still gets it wrong. But I do this. Should I say the question?
Will you hit me with it?
All right. So I'm not going to give the answer to this question. I'll actually be interested to hear. My email is paul@everythingmoney.com. In the subject, I want you to put answer to the question, investment question. If you email me, the first person to get it right
gets what?
$1,000.
$1,000?
$1,000 to get this question right. The first person to do it, paid by PayPal, I will pay it out through $1,000. The first person to get this right. I don't want some long dissertation, but first off, there's one hint. It's a trick question.
I think I owe you more than $1,000 right now, so I'll be in the
No,
money.
you don't owe. I don't think you owe me money. I haven't looked at it at all. I don't think you owe me money. I think I still owe you money.
Okay, go on.
Company A, Company B. Company A is growing at 10% a year, and it'll grow this way for the rest of the time. Company B grows at 2% a year for the rest of the time. Company A does $10 billion in revenue. Company B does $20 billion in revenue. Company A does $2 billion in profit, so 20%. Company B does $5 billion in profit, 25%. Company A has no debt. Company B has $10 billion in debt. Very simple question. Which is the better investment? Again, it is a trick question. Keep in mind, guys, I've asked this question of 100 people, only 2 have ever gotten it right. Company A, Company B. These are the 2 companies. This is their data. This is their growth indefinitely for the future. Everything else about the companies is exactly the same. Apart from this data, everything's exactly the same. I don't want to hear questions about, well, what about this? What about that? Exactly. One of you is likely to want to ask a question that is probably the right answer if you just go a little bit further. Because there is, but the bottom line is, this is a trick question. Which company is the better investment? So send it to me, because this will be part of, and this is what I want to ask people. The problem is, now that I've asked this question publicly to tens of thousands of people, is it really going to last? But it'll still last. There'll still be people not going to see it. And the whole point is, I want to hear your thought process. But when you write me an email, I want the subject to say investment question, and then just write your answer. It should be less than 30 words.
So
actually, it should be less than 10 words.
I feel like we've entered a realm where when you say which one's a better investment, with so much thought on potential growth of what some of these companies are going to do over the next 2 decades.
I got it. Indefinitely 10%, indefinitely 2%.
I see. These are locked in.
Locked in. Guys, it says locked in forever. I said indefinitely.
You did. All right. This is.
And I'm going to say the margins are all going to stay the same. So when they do $11 billion next year, their profit will be $2.2 billion. It's all going to go in tandem. They're never going to have debt. They're always going to have this ratio of half the revenue. So in the end, it's a fun quiz. And I hope somebody gets it. They're going to get $1,000 from me. It's going to be awesome. But process is what matters for good or bad investor. Long-term results are what matter for good and bad investor, not year to year. I couldn't, like, a guy, Gary Mashura, I think is one of the best investors I've ever met, probably the best one I know. I have no idea what his returns are on a year-to-year basis because I like his process. I have money invested in him. And I just look at my statement every month and go, cool. And when it's down, I tease him. I write him an email, tell him he sucks. He laughs. One quarter, he was up 40% in a quarter. And I wrote back, I'm like, so can I assume this is going to be 180% a year? He said, no. I'm like, oh, okay. And for those of you who say, I know 40% times 4 is 160, but I was doing compounding. Don't get too excited. But that's the thing. I believe in this process. So I mean, apart from him lying to me about where my money is, which very well could be the case, he could be running a Ponzi scheme. Apart from that, I trust his process, so I trust him. That's it. And he doesn't have to explain anything in the world to me about his investing because I trust his process. That's what makes a good investor. And then I meet financial planners out there who don't even understand what depreciation is. And I go, listen, I just can't take you seriously. I'm sorry. I just can't. You're an idiot. That's it. So understand process. That's what makes a good or bad investor. Results, yeah, I get it. Results do matter over a long period. You have to sit there and look at the results and see them. I get that. But John Hussman has some of the worst results in 10 years. And I think he's a brilliant man. People look at me and go, you're stupid for thinking that. I know. I'm stupid. I'm sorry. He's done terrible in the last 10 years. I still think he's a brilliant investor. I think he's a smart guy. That's it.
If this resonates with you and you have felt alone, perhaps in your investing journey, you can join everythingmoney.com, patreon.com/everythingmoney, have access to our software, and join this type of discussion on a daily basis. You can chat with Paul, myself, and Mo, and our mindset moving forward over the next, for us, Paul, 40, 50 years. Click on the top right here. You can see a video about our 8-pillar process when we're looking at stocks and investments. And of course, Paul, we talk about real estate. We talk about retiring. I just love being on the show and talking about these numbers and getting sort of your thoughts. So that is our take. Make sure you subscribe, fondle a thumbs up, and we will certainly see you next video. Thanks for watching.